Welcome back to Trendlines over Headlines, the show where we break down the markets with some of the best traders and analysts out there. My name's Patrick Dunawilla. I'm the editor of the Chart Report, and I'll be your host. We've got an interesting guest for you today. James Bartelloni will be joining us right here in the studio. We call him Bart. He's a former Top Gun pilot in the Navy turned technical analyst. He was actually one of my mentors, and he's into a pretty unorthodox form of technical analysis. But I always value Bart's perspective, and I learn something new from him every time we talk. Anyway, before we talk to Bart, it's Friday. The markets are closed, so let's take a quick look at how it all played out. Hey guys, thanks for watching. Just a quick reminder, be sure to click like and subscribe so we can continue bringing you awesome content. The NASDAQ was the only major index that closed higher this week, but just barely. As you can see, it was pretty much flat. The Dow lagged, falling a little more than 1%. Now, taking a quick look at the S&P 500, it fell about 80 basis points this week, but we ended on a strong note on Friday, and we managed to close about 2% off the lows of the week for the second week in a row. We're continuing to test 4,200, which has been resistance for months now. I can't remember the last time we spent so much time testing a level like this, but the bulls will have another chance to crack it next week. The Russell 2000 is looking a little more vulnerable than some of the larger cap indices. It's continuing to test crucial support around 1,700, which coincides with the pre-COVID highs and the 2018 highs. Buyers defended it this week, but it continues to be one of the most important levels to watch at the index level. Now, looking at the sector performance, tech and healthcare were the only two sectors that closed positive, but just barely. Tech gained a little more than 0.25%, while healthcare was pretty much flat. The weakness in financials got all the attention this week as regional banks continue to blow up left and right, but energy was the real laggard this week, dropping nearly 6%. Anyway, that's enough from me. Let's talk to Bart. All right, Bart, it's great to have you in the studio today, and welcome on.
Thanks,
your first time here.
Yeah, thank you.
Yeah.
And,
not your first time in the studio.
That's right, but on the Chart Report, and great work with what you're doing. I love looking at it every day on Twitter, so being here is really an honor, and hopefully I have a lot of fun.
Oh, thank you. I really appreciate that. But you know, every time we chat, I end up, you push me down a rabbit hole.
Yeah.
And I end up walking away with a bunch of questions.
Yeah.
And good questions too, not bad.
Yeah.
But before we get pushed down that rabbit hole, before you push us down, I want to introduce you to our audience a little bit and get a little bit more about your background, because you have a very impressive background.
Oh, thanks.
You started your career as a Navy pilot.
Backseater, but yeah, naval aviator.
And at the Top Gun school.
Yeah,
so what is Top Gun really? That's like,
really,
like Tom Cruise. That's all I know it is.
Yeah, you know, so I spent 12 years flying. It was a great run. You know, it's kind of how I found the MTA, Market Technicians Association.
It's the CMT now.
Is it really?
Yeah, CMT Association.
Sorry about that, CMT Association. But you know, I wanted to push myself to be as good as I could be, right? And I saw in the profession that I had chosen out of college, flying, you know, fighters, Top Gun was, you know, getting to the pinnacle. And so it's all about employing this platform in combat. But ultimately it's about teaching, right? Because what they're trying to do, I mean, I don't want to get religious on this, but they're trying to create disciples, right? The instructors are unbelievable individuals. The commitment to excellence is beyond anything I've ever experienced, right? So far at my age and what I've done it was the pinnacle of my career, quite frankly, my life, because everything you did was a commitment to excellence, right? The instructors, the people who maintained the jets, the support, it was quite awe-inspiring, quite frankly.
What type of aircrafts were you flying?
So I flew the F-14, so there's 3 versions of that, F-14A, B, and D. So I flew all those. I had a little time in the Hornet, but not much. But ultimately, what they're trying to do is they're trying to make you an expert at employing this platform in combat. And they do a really good job at that. But the real mission, which, by the way, I fell asleep in Top Gun 2. I did.
The movie.
Yeah.
Yeah?
I was like, anyway. But what they're really trying to do, and I wish this would come out in the movie, is they're trying to make you a great teacher so you can go back to your squadron and teach those, let's say in an F-14 squadron, there could be upwards of 30 air crew. Hornet squadron, obviously, you know, a single seat Hornet squadron, that's half. But you're trying to take what you know and what you've been taught and distill it to everyone else. So you raise the capability of your squadron to be a very lethal force when you go into combat. So
I see.
that's what Top Gun's really about. Like, people don't realize that, like, I learned how to erase a board, right?
Yeah.
A lot of people erase side to side. Well, when you do that, your butt moves side to side. So I was counseled to erase a board up and down.
Interesting.
Yeah,
Interesting.
So that didn't come out in the movie, but yeah.
Very process driven.
Very
So let me ask you
process-driven,
this.
yes. Yeah, great point. Yeah.
What are some of the similarities? I mean, you must have learned some things in that, you know, high pressure situation, not too dissimilar from the markets. So
Correct.
what are some of the similarities between, you know, your military training and the markets and how you trade?
It's a great question. In fact, you know, I had the amazing opportunity and quite frankly, pleasure to train with Connie Brown. And she's talking about one time she trained a test pilot.
In technical analysis, right?
Yeah.
In case people...
in technical analysis.
Connie Brown.
Not flying.
Connie Brown is an excellent technician.
Oh, she's incredible.
She's done a lot of work on OSI and a bunch of other things, but go on, sorry.
No reason to. I'm just saying she's a force. It's incredible, right? But she told me, and it was when I was just kind of starting out, that air crew make wonderful technicians, horrible traders.
Interesting.
And she was kind of right. And it took me a long time to work through that. And the reason was, from a military perspective, we plan to the nth degree, right? When you get a mission, whether it's a bombing mission, an air-to-air mission, a defensive counter-air, whatever type of mission you get, you plan that thing as if they give you 20 minutes, you take 21 minutes. If they give you a week, you take 10 days, right? And you try to be so precise, because if you're wrong, you're going to kill someone or yourself, right? And I took that into trading, right? That I tried so hard, and I gave myself such a small error or such a small margin of error that you can't do that in the markets, right? There's slippage, everything like that. And so it hurt me, right? So while
you're being like almost too precise.
Too precise, right? And it took years for me to let that go, because when you're wrong in the cockpit, you die. Yeah. When you're wrong in technical analysis, you get stopped out and you got to, you know, shake it off and get ready for the next investment, right? So that was both a blessing and a curse. And she was totally right, right? The process, right, to manage risk, you do it the same way over and over and over again. They call it bonds, boots on non-skids, right? So it's like, hey, bonds 20 minutes prior to launch. Well, it's usually 30, but whatever, I'm making it up, right? So that means once you step foot on the deck, you lock in, and now you're walking around your jet, you're prepping, you're working with your pilot, right? And you're doing everything you can do that jet ready to get launched off the aircraft carrier, right? And if it is, then you have a choice. Am I jumping in it or am I not, right?
Kind of like the trade.
Bingo, right? So have I done everything to manage risk for this investment? If I have, I've got to take it, right? If I haven't, then I don't, right? And so when you get shot off the aircraft carrier, it's 2 seconds, right? 2 seconds, you're at about 130 miles an hour, right? So you really don't have a choice if you're going to live or die. It's that quick, right? Well, once you enter the market, what can you do?
Right.
Nothing except control the loss.
You got no control over the market.
No control, but you have control over how much you lose, right? So from the comparisons of the military, it was a blessing and a curse. So I'm very process oriented, just like you had to be in the cockpit, right? And what would happen is you created that consistency of doing the process over and over and over again. And then if you skip one of the processes to get off the deck or anything like that, something would trigger you and you'd be like, okay, something's not right. Let me go back and do it. It's the same application from an investment and charting perspective. The other of that is I had to let go of being wrong, because my entire 12 years was about I had to be right.
Yeah, I mean, like you said, the outcome, if you're wrong there is...
That's right.
You're dead.
And quite frankly, I was just too immature, too egotistical to understand what Mrs. Brown was telling me at the time.
Yeah, and you know what? It reminded me of this quote. You know, I love quotes.
You're awesome at them, yeah.
My friends call me Platitude Pat, but
I didn't know that. I'm going to start calling you that.
You're welcome to. But I think it was General Patton who said, plans are useless, but planning is indispensable, right?
Absolutely.
So you gotta plan, whether it's trading or you're in the cockpit.
Yes.
But also, I mean, hopefully not if you're flying, but you also have to be prepared for things to not go.
It never
right.
goes.
Yeah.
Right. And, you know, beforehand, we were talking a little bit. Patrick was telling me a friend was doing it with golf or something. And my, you know, golfing and trading, what's the, you know, and I'm like, you're always hitting out of the sand. Right. And you got to learn how to, you know, oh, crap. Right. And so the entry is so crucial. Mm-hmm. Right. You got to get the best drive off of it. You got to get the best, you know, entry into it, because then it just opens up what you can do. Instead of, oh my God, I'm already down because I screwed up the entry, right? So again, the parallels are indispensable, right? The structure, the discipline, the process, right? But ultimately, I would say now, I thought that everything I just told you was 95% of it. For me now, that's 5% of it. The 95% of it is the mental aspect. Am I okay with losing a trade? And I've proven that I can. So yes, I'm okay with it now. But for a while, it was like weighing on me. Like I thought I could be so precise that I could, you know, and I was driven to find, I'm like, the number that the market's stopping at is stopping there for a reason. And that was the dive into the rabbit hole that we were talking about earlier.
So like learning how to be wrong and how to accept that.
Yes, that's the biggest thing.
My question is, so how do you go from the Navy as a naval pilot to technical analysis and
I don't know, right?
That,
So my very good friend and an amazing American, Jeff Lay, I was actually selling him a software company that I'd started. We started a virtual reality software company, 20 years too early, story of my life. But I'm talking to him and I hear this, and it was an alarm, right? And I'm like, well, what's that? His call sign was easy lay, do the math. But I said, easy, what's going on? He goes, you don't want to know. I should have listened to him. If I would have listened to him, we wouldn't be talking today, but I'm glad I did. And I came around the corner and there was a chart. I think it was like the euro versus the yen. I'd never seen technical analysis. To this day, I've not taken a business course. So ask me what P&E is, and I'm not even sure if I can tell you. Physical education, right? Not, you know, profit and earnings, but is that even right? Profit and earnings?
Price earnings?
Price earnings. See, I really don't know. I didn't even know there was an interest rate decision yesterday, right? So I don't pay attention to it. But he's like, it's a chart. And I don't know what it was. I just saw it and I just went, whoa. That's cool. What is it? Technical analysis. And so in the airport in Ohio, I bought a book on technical analysis. Don't give me another one, right? And that just began this journey, if you will, to understand the market. And in understanding the market, I've understood myself. So it's been one hell of a journey. That's all I can tell you, man.
Yeah. And you're into kind of an unusual or unorthodox style of TA. And one thing I've noticed, I moved here from New York to California about 2 years ago. Surfing. I know. We keep talking about it, but I can't help but notice the difference between East Coast technicians and West Coast technicians. And there is a difference. I think East Coast technicians tend to be more institutional, more traditional, support resistance, those types of that style of TA.
Yeah.
Whereas out on the West Coast, I've noticed a lot of technicians are into the more esoteric type stuff, like Elliott Wave, GAN, Wyckoff, things like that.
Yeah.
So, and I know you're into some of that stuff too. So how did you get into that flavor of it? And do you see that kind of difference as well?
Well, we talked about it. I had never noticed that, but I can definitely understand why that is a reality or your perception. So I think that's really interesting. I mean, we're a bunch of whacked out Southern California people, right? No, I want to say it's a calling. I don't know how to describe it, right? But you start seeing these charts and you start seeing the rhythm and you start, okay, something bigger is going on here. And the first course I took was from Joe DiNapoli, DiNapoli levels, right? And That was basic. It was basic Fibonacci tactics, right? And on his shelf was a book by Larry Pesavento. It's like, I got to go see Larry Pesavento. So Larry, to this day, is just an unbelievably powerful light soul. He's been trading the markets for 40 years, and he taught me the patterns. And one of the things he told me was, they will not work for you until they become yours. Again, I'm like, oh yeah, whatever. Totally right. Right? And so I've kind of created my methodology to find patterns that work in the market, right? And then I find the, CMT, and I see Connie, and so I went and trained with Connie. And then I went and trained with Michael Jenkins, unbelievable individual, so giving. And all of these people were so open to pass on what they learned, right? And so we're just continuing to pass it along, this body of knowledge, right? So I can tell you that I didn't choose, or I didn't say, oh, I've got to go down this path. I think it just kind of unfolded.
I see.
Yeah.
And you know what's
it's unfolding for you.
Yeah, it sure is. So I think what's also interesting though is even though there is that difference between the two, and you look at things totally different than I do, but I think it's interesting that we a lot of the times we'll come to the same conclusions on things, on charts and stuff like that. And you'll find your reason for doing it. I'll be like, well, that was a head and shoulders, or well, it broke support right here. You know what I mean? But ultimately, we arrive at the same place, right? And you've made some incredible calls recently.
Well,
so
thank you.
Back in like end of January, right? On your blog here, you had the bank index as a sell. And what's happened since then. I think everyone knows what's happened since. We've had, at least 3 regional banks completely blow up, right?
That's a couple more that blew up today, I think.
So let's break it down. Let's walk through this bank index BKX, right?
The KBW banking index. So
what were you seeing on this that got you bearish, that had you label it as a sell?
Well, first thing is Connie told me never to count a wave again.
Really?
Oh yeah. She's like, you are wave deaf, tone deaf.
You didn't listen to her because I see you counting waves all the time.
But I probably should have, kind of like Jeff Lay, or I wouldn't be talking to you today. So I like to say my Elliott wave ability is like my golf game.
Okay.
Right? If you're keeping score and you're like, hey Bart, what'd you get? I go, I got a 4. Then it's probably a pretty good count.
Okay.
But if I'm like, hold on, Patrick, and I 5 is really an 8, right? I mean, so if I get a subwave to a subwave to a subwave deep, I don't know what the hell's going on, right? So, to the best of my ability, I try to look from a longer term, a weekly, monthly. I just find it's easier to count instead of getting way down. Mm-hmm. People who can do that are just at a whole nother intellectual capacity, right? I'm not there, right? So it looked like 5 waves, right? It didn't really break any rules. It kind of, if you're a purist, overlapped 4 and 1, right? But for me, I'm like, Not on a close, right?
Yeah, there you go.
It's only a wave. It's subjective, right? So, I saw 5 waves. It looks like 5 waves, right? And so then I start looking at, different patterns that are in the marketplace. And so if you can see the 1 or A there, what I see, again, I go to Elliott wave, right? I look for corrections. Again, I go back to, Connie. She's like, hey, if you're going to do any Elliott wave work, learn the corrections, right? So you can go to a chart and go, oh, that's a correction, and you can kind of figure out the roadmap, right? So the market likes to correct in 3 waves, A, B, C. So here on a weekly, I can see that it's setting up for this area right here, that 1 array, A, B, and now here comes C. So I'm like, ooh.
So you're waiting for that.
Yeah, I'm like, wow, we've got a sell pattern appearing on the banks.
Okay.
I have no idea that they're all about to crash. I have no idea, right? It's just the pattern. So people say, man, that was a great call. Thank you, but it's not me. It's just, hey, here's the pattern. And people say, well, how often are you right? And I say, well, I'm right 100% of the time. Like, you can't be, no way, right? I'm like, hold on. Because I know exactly where I'm wrong. Right?
You got your out.
I've got my out.
You got your eject button if you're in the cockpit, right?
That's right. Exactly. Right. So I don't know what's going to work or what's not. You never do. Right. But you can make pretty good assumptions. If this works, then for whatever reason, the banks are in trouble. If this pattern fails and the banks explode higher, then you know what? We're probably in a good position. Banks lead us up, banks lead us down, get long, right? So you come up with these levels where you can make decisions on how you want to deploy capital, right?
Mm-hmm.
So in this case, I think go down to one more chart if you want. In this case, now we're down to an hourly. So we took, that weekly chart. Yeah, you neck down. And we have, quite frankly, a perfect, what's called a Gartley cell, right?
Okay.
It also corresponds.
I'm not familiar with
No,
Gartley
yeah.
at all,
We'll get into that in future
sure.
episodes, right? But what we also have is an A, B, C correction, right? Those are measured moves, right? So what we're looking for is this AB move to be equal to the BC move, right?
I see.
So let's get back in the cockpit, right? When I used to get in the cockpit, no matter what, I'd zero everything out, radio, all these different things, right? I'd zero everything out because now it's my cockpit. And I'd sit down and I'd set it up the way I want it, right? I do that with the charts. I always project first. I project, where can this thing go?
And what does that mean exactly?
Great question. And we'll get into it maybe a little bit later. The whole concept of pattern recognition, Fibonacci, GAN, if you will, all these different things is vibrations, right? Everything's vibration. And the market moves in waves, right? So when you start looking at these patterns, if you will, that occur and are fractal, they occur on all timelines, right? You can set up a regular way to look at the market. So when I say projection, this mouse, right, weighs a certain amount, it's a certain height above the desk, and when we drop it in, waves occur, right?
Yeah, and one of our first conversations years ago, you kind of described that, the
That's
rock
right.
hitting the water.
That's right.
And that's the inception. And then
Bingo.
from there, causes ripples.
That are harmonically interconnected
Right,
via music, sacred
there's-
geometry, Fibonacci, yes.
There's proportions existing within those ripples.
Exactly.
And it's not too dissimilar from the market. I think you
That's
call
right.
it the primordial wave, right?
Yeah.
That first decline, right?
Yes.
When data's first available or when
IPO.
it first IPOs, right?
Yeah.
That first big decline is the rock hitting the water, right?
That's right.
And from there,
Everything
you have
is
proportional
created.
waves. Is
Yes.
that kind of the
Yeah,
theory?
Yeah.
Okay.
Yeah, and everything's harmonic. You've nailed it, right? So when we start talking about it, that is one of the primordial rocks hitting the water, right? This move right here, right? And all we do is copy, paste. Nothing new under the sun. That was one of Gann's, favorite quotes from, I think it's Ephesians, right? It all repeats over and over and over again. So that measured move will probably repeat itself again. And then, because the market's fractal, I like to call them nested projections, right? So we're using projections on Elliott wave. We're using projections on numerology. We're using projections on Gann square of 9. We're using projections on a fundamental frequency. There's multiple projections that we're going to try to do. And what we're going to try to do is get all those projections to be right at about that red box.
So you're kind of increasing your odds by stacking a bunch
Bingo.
of things, when a bunch of things are all aligning on one level.
Something's going to happen.
Right.
What?
Yeah.
I have no idea.
Yeah.
Something, right?
Right.
So all I can truly control is a stop placement, right? Because we don't know which one's going to work. But all these numbers are all coming together. The market should inflect and pivot down, right? But we don't know, right? It's probability, right?
We'll see what happens,
yeah,
right?
exactly.
There you go.
So there we go.
And that wasn't the extent of it. I think that was
it's still going. Yeah.
as of March or something.
Yeah.
I mean, if this was in the same scale, the price would probably be down on the ground, or maybe down to the next level.
Yeah, we'll see where it ends
Right.
up, right? So this pattern worked. They don't work all the time, right? And so I'm okay with that. Let's go back to, what Miss Brown told me, what we were talking about being wrong. For a long time, I was like, it didn't work. What did I do wrong? I didn't do anything wrong.
Yeah.
The pattern didn't work. Sometimes it does, sometimes it doesn't. Obviously, this one did. And so we got to think to ourselves, what we just showed is long before the market got there, we had that level, right? The entire globe, right, is buying banks.
At that point.
At that point.
Not anymore.
Right. And it hits that number, and somehow the consciousness of every single multi-billion-dollar hedge fund or $1,000 in his bank account E-Trade college student and everything in between stops buying banks and starts selling. And I think I told you, the day that I no longer am amazed that this shit works, it's time for me to hang up the cleats, right? Because that's just incredible, right? And what is incredible to me now, and again, it's a maturation, right? Is not that it worked. It was that I can control risk that closely. Because that's the only thing I can control. So yeah, you project, and we'll go over that in future episodes, all these different ways you can project. You extend, right? So all these different moves, all these pivots in the market are important, right? And so you want to use these different ratios that we'll talk about to come up with a confluence level that aligns with the projection, right? So you project, you extend, and then the last thing I do is retrace, right? A majority of the technicians out there, people are getting familiar with using 0.618 Fibonacci retracements. They always just do retracements. And that's just 1/3 of the puzzle, right? The puzzle is you have to project where the market's going. You have to take into account all those other inflections that occurred and extend off of those. And then you put a retracement grid in. Then I look for structure. I just look for basic polarity. A lot of times you'll find that these patterns occur where former resistance is now support or vice versa.
Right.
So I look for PERS, project, extend, retrace, structure. And then every once in a while, if it's like a big move, like a weekly or a monthly, I'll throw a D in there. I'll just throw a 14-period RSI and look for divergence.
Okay.
Right?
There you go.
I failed.
Now you're speaking my language.
I failed CMT2. I mean,
that's all right. I failed level 3.
Oh, did you? All right. Well, we're right. Yeah. And I think part of the reason is because, again, I came into this without any background, right? No finance degree, no fundamentals, right? I was literally like, oh, and I got pivoted towards geometry, musical theory, vibrational theory, right?
Yeah.
So it's not that this fundamentals don't work or RSIs, Bollinger Bands, Ichimoku clouds, all this other stuff, right? Doesn't work, it does, right? I just don't understand it. So
it's
I just look at
this is what
works for me, right?
And you got to do that.
That's right.
If you're a technician just starting out, you got to figure out.
Again, that was a
what works.
maturation process, right? So there's people who've made billions on fundamentals. Awesome. There's people who've made billions on stochastic. Great. Me, this is what I'm working with.
Well, so let's go to an example, shall we? Should we try to chart something, right? All right. So we have JP Morgan here.
Yep. And this is this morning. Yeah, just bang on that chart. So, people can see here, the oscillators work, the moving averages work, all these different technical indicators.
Yeah, see, to me, this looks like a head and shoulders, right?
It's very clear. It's close, right? But what's great is a lot of people don't see the right shoulder till it's already at the neckline.
Till it's too late almost.
Right. We're seeing it being built right now. You see, so I agree. But it's a little bit too early to tell, right? So what I would recommend is take all those indicators off your chart and just have price and time and what's the chart telling you, right? So the first thing I always do is I look for a measured move, right? And in this case, I just took the circled move, right? And we'll see that in a little bit. But what I saw is the all-time high here. It did the exact same move down. And it's done the exact same move up. But more importantly, it's off just a little bit in price, but it's precise in time. And that's why I did the triangle, right? Copy paste this triangle over here and on there, and you can see that the timing is precise. So there's probably...
I see what you're saying, kind of the proportion between that lower high there and the high.
It's exact.
It's
same one.
Very, very similar, yeah.
And I'm like, all right, so going into that pattern, have we done a measured move before?
And where did you get this red line?
That was the measured move.
From what?
So I went from here to here, right? Because I want to see that the same pattern's occurring, right? So I just went to there, and I'm like, all right, there it is. And now what we see with these different tops on JP Morgan is it likes to top, go down a little bit, rally, gap down.
Right.
There's a gap down, there's a gap down. I don't think we gap down today, right? But the biggest bank bailing out all these regional banks, if it leaves an island reversal here, something ain't right at the Circle K.
Right.
Right? And so that's all I put. JP Morgan, gap down, creating an island reversal is something to watch for.
Oof.
I don't know fundamentals, right? So when we go back to when I posted sell the banks in January, I had no idea. Silicon Valley Bank was, I just don't pay attention to it, right? So when you take all the other stuff that we blow our charts up with as technicians and start and just look at price and time and what's the market telling me, it'll give you some very, very good hints. And now if you go to the monthly chart on JP Morgan,
Sure.
it'll be very telling, right? And so again, this is a monthly. This is all the data, right? And so any of the moves that we see here, I could have used as a seed move, as a measured move, right? I just took this last move here, right? This move right here, okay? And so what I want to ask myself is, has this occurred before? And you can see the solid blue arrows, it's occurred a lot, right?
And you're talking about like the height basically between
I'm talking about the
a
height.
major low and a major
That's
high
right.
kind of thing.
I'm not doing the time, but you can roll these horizontal and
And
get time cycles.
you're saying they're kind of proportional.
They do, because price equals time.
Well, so let me ask you about that. You know, W.D. Gann,
Yeah.
he had a quote that said, time is more important than price.
Yeah.
When the time is up, price will reverse. And
That's right.
it's a very ambiguous
Yeah.
quote. You know, it's like
Yeah.
that Will Ferrell movie, Blades of Glory, where he says,
Gotta love that movie.
nobody knows what it means, but it's provocative, right? So what the heck was he talking about?
Well,
When time is up, price reverses. What does that mean?
so price and time are the same thing when we look at charts. It's a hard stretch, but you just gotta, if you study it enough, you understand that when a stock, let's say a stock's tops or bottoms at $50 price, that will also spin off corresponding time cycles, 50 hours, 50 minutes, 50 months, 50 years from now, right? And so when the market decides that it wants to reverse, there will be a price and a time convergence. They could be equal or they could be harmonic, right? But the market ain't doing anything until price and time harmonically converge. So when time is up, when it's time, and we have that price, the market will inflect. That's
see.
what it means, right? So we could take those, and quite frankly, it was early this morning and I didn't have the time, but because price is time, that measured move in price, if you rotate that horizontally, I think you'll be shocked at what you see from a time cycles perspective. It'll be pretty cool. Yeah.
I know they say you can't do technical analysis on the VIX.
You
but
can't.
we're gonna commit
We're gonna try.
a cardinal sin here.
Yeah.
So let's dive into it. And you know, one fun trick I learned during the CMT exam and that whole process was, if you take the current VIX at any given time and divide it by 16, 16 is that golden number.
Why 16?
So 16 is the square root of the number of trading days roughly in a year. So let's say, let's call it 252, 250, whatever it is.
Yeah. Yeah.
And it gets
Square
you around
roots.
like 15.8.
Okay.
So it's roughly 16. But if you take the current VIX and divide it by 16, you get the expected move in the S&P 500.
Fantastic.
Percentage-wise.
Okay.
So
never heard that before.
right now VIX is at 20.
Yeah.
You divide 20 by 16, you get roughly
80% or 8.
Okay, so 8.8.
Yeah.
So that's saying that you can expect that size move, like 80 basis points basically.
Phenomenal.
And,
Okay.
and that makes sense, right? If VIX is at 30 or 30, you know, you can expect roughly a 2% move
Nice.
in the S&P
Okay.
500.
Yeah, I'd
right?
never heard that before.
Yeah.
Thank you.
I love that
I
trick.
just like that they use square roots.
You know, it's not that useful. It's not like you can trade off it, but it's interesting.
Why
you know,
not?
and it's a good little approximation.
I
to
think
keep
it's
in your
great.
head,
Hey,
like,
man, it's another tool. Thank you for
But
that.
anyway, so let's get to it. Let's. What are you saying here?
Well, I was going to ask you, right? Ultimately, I guess you can't use technical analysis, traditional technical
do it
analysis,
anyway,
right? But perhaps there's patterns that exist in the
Sure.
VIX, right? And so, you know, as I was just looking at the VIX, it was funny. There's a great group, if you want to learn options, Top Gun Options by Wiz Buckley. He does an amazing job. And for about a year, I was helping him out with a morning brief every Friday morning and everything. And it was a lot of fun. We had a blast with it. But, you know, ultimately I was talking about these things. So once we have, if you take it to the orange arrow and the blue line, once we had that move down and we had that rally up, now it gives us an opportunity to what? Project, right? So I think this was back in October or November. Based on the move down and the move up, we were able to project to $16. I was like, that's where we should buy the VIX.
So how did you arrive at that?
Because I just did the projection, right?
Okay, so walk us through it.
Yeah, I took the high down to the low, up to the high, and I projected, right? And I mean, it almost hit exactly, right? But we want to try to see if there's some sort of timing component. So again, if you take everything off, right, you'll be able to see. And so if you look at it, what you can start to see is this is about the same move. And so I just measured it. And these are trading days, right? It's not calendar days or planetary movement or anything. But it was 320 days. And so I copy pasted it and bam, it was 320 days. Right?
And that is what, the year to date?
The same. Well, this is 2022. This is current, right? This was the 2020 smash with COVID and everything. But what we're talking about, it's still a beat, right? It's still a rhythm. And so from a time perspective, it took 320 trading days to make that high to low. 320 calendar days. It's exact. And it was like one more day or when everything. But the key point is we had the projection. More importantly, what do we have? Mr. Measured Move, right? Orange. Done it before? Yep. Done it before? Yep. Done it before? Yep. So again, all we're trying to do is put probability in our favor, right? So we have a timing component, right? We have a projection. We have a measured move. This is, and we also have, obviously the VIX is very low. This is kind of a no-brainer to buy the VIX, right? So maybe traditional technical analysis is tough to use, but again, the patterns, the rhythm, the beat, it still works on any liquid tradable instrument. So in this case, we have AB equals CD in price. And when time is up, what happens?
Price reverses.
Price reverses. So our time was the same, up and down.
That's amazing.
Yeah, I know, right? And so, I don't know. And then you go to the S&P, you go to the NYA, you go to any of these different indices, and maybe there's a sell pattern. Maybe there's some divergences, right? Maybe there's some Bollinger Bands that are about to be pierced, right? All these different things.
The traditional TA.
Traditional
tools.
TA,
Yeah,
and you overlay that after you've taken a look at price and time. That's how it works. And don't make it any harder than that.
No, I mean, we talked about some of the differences between East Coast and West Coast.
Yeah, we're on the West Coast for sure now.
Right. But, a lot of that East Coast flavor doesn't have that time component in there.
I don't know why,
Yeah, I mean, I think it's a little, I think that discipline comes from the institutional side, right? A lot of these people, if they're presenting TA, they got to present it to
people who don't believe in this crap.
Right, exactly. So and you'll get laughed out of the room if you bring that up, right?
I have been, by the way.
There you go. So that's probably why.
It is.
But
I don't go to Wall Street anymore. They don't want my people. They don't want people like me.
I think there's so many components of TA that are so out there. Of the traditional stuff too.
Oh, no doubt.
Why not take a look at this stuff?
Absolutely.
Why not consider that time might be playing a role in these movements and stuff like that?
And I think, the one thing that's great with working with you and as a colleague and a friend is you're open to it. But ultimately, don't force it, right? If this is interesting to you, then maybe go down the path a little bit. But if it doesn't resonate with you, stop. Don't force it, right?
Right.
Just learn how to manage risk the best way you can. This is what works for me. It will not work for everyone, right? And it takes time, right? No, time is up, right? So I'm not saying that this is the panacea. It's not. It's a way that I enter in the market and manage risk.
Yeah.
And it might not be for everybody, but it's worked for me, and it's really helped. So price and time, that's all it really is. Yeah.
Right. I mean, that's why I enjoy talking to you.
Thanks.
It's like, our way of looking at things, our approach
You're conflicted.
is so, I sure am.
Because the
But-
vast majority of your subscribers and people who watch the chart report are probably on the East Coast.
Well, yeah.
And then you got this crazy guy who surfs all the time and everything is coming in and telling you all this stuff. And you're like,
He's
oh,
flying planes.
crap.
he's
That's right,
surfing.
right. I'm all over the place.
No, but I think, you know, like I said, like our approaches are totally different,
Yeah,
but so often we
they converge.
we
Yeah,
come to the same conclusion
yeah,
through different ways, right?
Yeah.
Through different roads of getting there,
yeah.
we arrive at the same place.
You're absolutely right. And the place is just manage risk.
Yeah. So maybe that's confirmation that we're both onto something, or
We're
maybe
both
it's
batshit crazy.
That, yeah, I was gonna say that too. But
Awesome, Patrick. You're doing
Yeah.
great work, dude.
I appreciate that.
Yeah.
You know, I think one of the things you've kind of bestowed on me is just getting myself out of that traditional TA, and I still use all
course,
my
it
basic
works.
stuff.
Yeah.
You know, I'm not ready to subscribe to some of this stuff yet, but
That's fine.
I think just getting yourself out of those traditional tools and just every once in a while, you know, taking it all off, throwing it all out the window, and just looking for simple patterns
Yes.
that repeat. And it's amazing how much they do. You know, a simple impulse move, you copy and paste that, and you'll see the similar move. And these are long-term charts.
Yes.
These are monthly charts,
Yeah,
weekly
almost
charts.
exact. Yeah.
And it is amazing, you know,
Yeah.
how they tend to repeat themselves, you know,
Yeah.
these similar moves in proportion to each other. I
Yeah.
think, you know, that is some really fascinating stuff.
It is, yeah. And you know, ultimately, we need to trust, you know, these avatars that we're in. And what I mean by that is, I'm looking at you right now. I'm looking around this scene, and ultimately, my eyes are putting together patterns. We are the most powerful pattern recognition machine in the universe, right? So if you train your eye, and your eye is going to be drawn to the golden mean, because everything is, right? So if you train your eye and you just take the time to look at what is this chart telling me, you will see it. Doesn't happen overnight, but you just got to keep doing it, right?
Yeah.
But the more and more junk you lay onto that chart, the less and less you'll be able to see what it's really trying to tell you. So take that junk off, see what it's telling you, and then it's no longer junk. It's now, you know, companions of your decision to make a move or not. Because once you enter the market, the famous Mark Douglas, rest in peace, every market moment is unique. And once you enter, ain't nothing you can do about it except control the risk, right?
Yeah.
So use what's part of you. You are a pattern recognition machine. And over time, the more you study the charts from the pure price and time perspective, you'll start to see it. Now, JP Morgan, that chart took me about 3 minutes. And I really hadn't looked at it. And I just kind of thought, I'm like, wow, they're bailing out a lot of people. Let me go look at it.
Yeah, you know, it almost...
Bam, 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 I saw it.
It reminds me, I mean, what you just said kind of reminds me of that Da Vinci quote, it's not what you look at that matters, it's what you see.
Yes.
Right? And
yes.
there are patterns kind of existing in what you see, whether it's on a chart or whatever, that are there that you might not even be aware of,
Bingo.
right?
Yeah.
But we all as a species, you know, we all
You're
see it
talking the language.
see it a similar way. kind of,
Absolutely, right? And,
Yeah.
you know, not to be a Bible beater, but for those with eyes to see, you're going to see something differently. I'm probably going to be seeing something differently. But ultimately, spending time understanding that this market is vibrant, this market is energy, this market is waves, this market is music, you'll start to see the inherent rhythm in it. And it makes all the difference in the world.
Yeah. Well, Bart, like I said, I mean, every time we talk, you push me
Oh, we
down
had a great
rabbit
time.
hole,
You're pushing me too, dude.
and I
appreciate
walk away with more questions.
it.
but
Keep up the great work.
this was awesome.
All right,
We got to do another.
Oh, we will.
Yeah, and we got to go surfing.
If they want us to.
We got to go surfing sometime.
I'll be doing it
when
out
are we
there.
bringing the boards out?
Anytime. I mean, I'm literally out there. It's both a spiritual event being on the wave, but it's also very cognitive.
And before we wrap it up, where can our viewers find more of your
Oh,
work?
great. Thank you. Yeah. So bartscharts.com. I post there. I post on StockTwits. Andy at See It Market's amazing. I'll post some stuff over there at times.
Great. Yep.
Right. So I'm a business development. I have multiple businesses going. I'm an entrepreneurial. So I don't charge. My ultimate goal is one time when I ultimately can retire, maybe I'll have a subscription service and train people and everything. But right now I'm just trying to put put information out to help people out. And it's also my way of working, you know, what am I seeing? And it kind of
it helps your process, right?
Right.
I always say that too, like
bartchart.com.
with the chart report, you know, the chart report and the process of putting that together every day, that's kind of my way of
and so defining.
keeping my fingers on the pulse of the market, kind of.
Yeah, and you do a great job. So.
Oh, I appreciate that a lot. You want to give a plug to Navy before we go?
Absolutely. Navy Rugby, first time ever, national championship in Houston this weekend, playing Cal. Cal, if you don't know, is pretty much the Alabama of college football for rugby, but we beat them once. We're converging en masse to Houston this weekend. Go Navy, beat Cal.
Well, Bart, thanks again.
Thanks, dude.
Thank you guys for watching. If you enjoyed the show, be sure to click like and subscribe, and we'll see you again next week.
Awesome.
Thanks.